Hello, I'm Andy Prosser. I'm the Head of Investments at InvestEngine. Welcome back to our weekly Market Roundup, which is your quick look at what's been moving the market and what it means for investors. Now, it's been an interesting week for the UK market in particular this week. On Tuesday, the yield on very long-dated government bonds, i.e. those which have a 30-year maturity, they hit their highest level since 1998, so the highest level in 27 years. Now, government bonds with 10-year maturity, so a bit shorter, they're a better representation of the actual government borrowing costs. They rose as well to over 4.8%. And these borrowing costs have been driven up by worries over government borrowing, as well as concerns about the UK's high and sticky inflation. And this gradual rise in bond yields that we've been seeing, which is also happening in other countries, but has been particularly pronounced in the UK, it's bad news for the Chancellor, Reeves. And that is because higher yields on government bonds mean the government's borrowing costs have gone up, which in turn means that her headroom is very quickly shrinking against her fiscal rules, so it makes her life a bit more difficult in the next budget. And speaking of budgets, the date for the autumn budget was set this week for November the 26th. So the Chancellor's now got almost 3 months to come up with her plan of how she plans to improve the UK's finances. It's a relatively late budget, and that's to give the government fiscal watchdog enough time to properly consider the reforms that Labour are planning. Now, finally, as mentioned in the market forecast on Monday, the main event this week was the US non-farm payrolls report, which came out just now, earlier today on Friday. The market estimate was for jobs growth of 75,000 in August, and for the unemployment rate to rise to 4.3%. And what actually happened was that only 22,000 jobs were added, so quite a bit worse than expected. And what that has meant is that the chances of a US rate cut at the Fed's next meeting on the 17th of September went from 98% yesterday, i.e. a 98% chance, to over 100% today. And what over 100% means is that there's a very, very small chance of 2 cuts rather than just 1. So overall, this week, it's been a slightly positive week for markets, carrying on that run that we've been seeing, a strong performance this year from global markets, particularly outside the US. Okay, that's it for this week. If you have any thoughts or comments, please feel free to leave them below. Otherwise, for more updates, head to our blog or sign up to our newsletter, and we'll be back next Friday. Thank you for watching.